Sean, you're on mute.
Okay, try that again. Mute, mute, mute. Good morning, everybody. It is Thursday, December 14th, the middle of December, 2 weeks since OPEC Plus announced their extra cuts for the new year, and oil prices are down 10% since then. But obviously, on a slight upward bounce this morning, we're seeing in Asia Brent crude trading at 74.65, up 0.5%. NYMEX at 69.76, so still with its head below water of $70 a barrel. Let's kick off this morning with Ole Hansen, head commodity strategy at Saxo Bank. Ole, are you buying into what is quoted on Bloomberg, at least, the Fed pivot, and that all boats will now rise? Stock market in the US hitting a record yesterday.
Well, good morning, Sean. In theory, yes, but the problem is obviously we have rallied on the in disbelief now for quite a while. So I think we will need to see these rate cuts start to be delivered. But yesterday was most certainly a pivot away from the threat of further hikes. We saw the dot plot change now to indicating 3 cuts next year. The market straight away went ahead of itself, pricing in 5 cuts. So that will be the direction that the markets take next year. So I think the next big question for the oil market really is this going to lead to is this going to be driven by a recession or just a soft landing in the US? That really is, I think, the next major question. The Fed is obviously feels that the battle against inflation has been won, and now that they can start to ease, take the foot off the brake, just in order to ensure that we get a soft landing. The question is obviously whether that's achievable or not, and I think that's really what's going to be the focus at the start of next year.
Dr. Rad Al-Qadiri, Managing Director, Energy, Climate and Resources at the Eurasia Group. Rad, let's just start first. We're keen to get your reaction to the decision made at COP28 yesterday, the UAE consensus, as it's called. Your thoughts on what was achieved, I suppose.
Well, I think on the one hand, there's been a great deal of celebration. I think that something was achieved at all, and that language to do with fossil fuels and obviously language to do with oil and gas implicitly was included in the text, and efforts to, what are seen as efforts to try and reduce the use of oil and gas over time. But I think, that's measuring things by a pretty low bar. Within the context of COP, it may be a first. But I think sort of longer term, there's nothing sort of binding in there that is going to impact oil and gas. In fact, I mean, what you may get is something of a disruption. I think from a producer's perspective, including the UAE, this provides license to operate in terms of their expansions, in terms of their strategies of decarbonizing hydrocarbons. And I think the fact that it does is why you got the Saudis to relent at a certain point in terms of the language, but there's nothing specific about phase down or phase out. And I think from an investment perspective, it leaves things somewhat ambiguous. It's not clear how much oil and gas are going to play in the energy transitions and for how long. And I think if from an industry that is measured in decades, not sort of years, that creates a certain cloudiness for the picture moving forwards.
Rafiq Latta, Senior Correspondent at the Energy Intelligence Group, now a guru in all things climate change, and never ever had any history in oil markets. Rafiq, your thoughts on the COP decision?
Yeah, well, it's slightly okay in terms of real-term impacts, real-world impacts. These are always hard to quantify.
I mean, the front page of the Financial Times, I had to sort of dig the ribs of my FT colleague last night at our Christmas drinks, that historic on the front page. That's getting out there, I thought, a little bit.
Yeah, no, I'd go along with that. Certainly,
I mean, typically history is made in the rearview mirror, not after 5 minutes.
Yeah, okay. If you were at COP on Monday, you had the Spanish calling OPEC disgusting, the Spanish minister calling OPEC disgusting, quote unquote. You had Al Gore talking about a COP of the petrostates, by the petrostates, or for the petrostates, or I'm not sure about the order of that. You basically had a conference heading for the buffers and a bit of a crash, and it suddenly turned around. So certainly the atmospherics are, if not historic, certainly eye-raising, and it is the first time in 28 years of COP meetings that anything like this has happened. Like real world impacts, yes, we have to see, and yeah, Arad makes a very good point. It did give a lot to oil producers. You've got CCS in there, you've got low carbon hydrogen. So quite specifically, that means you can have blue hydrogen made from natural gas that gets backing. And you also had an unknown transition fuel, which no doubt is gas. So actually, for gas producers, it wasn't the worst COP in the world. I think that there was definitely a shift in terms of the atmospherics. You've got countries like Colombia joining various anti-fossil fuel pledges, the non-fossil fuel non-proliferation treaty, and that certainly was like a whoa. Aren't you? Don't you make some of your doesn't your economy to a certain extent rely on this? And you got Australia. Australia also joining a similar group. So there was a definite shift in atmosphere in this COP, and I had the feeling that Saudi Arabia was quite isolated. They needed, and that I hadn't seen to such an extent. I mean, last year in COP27, you had a definite feel that the Gulfies felt they were in the driving seat and had the answers, or felt they had the answers. It might have annoyed environmentalists, but that was the message you're getting, and a lot stuck. And this time, certainly large, on a very significant point, their push got derailed.
Interesting. Ole, you mentioned in your opening comments there about OPEC Plus have to see where the economic landing, if you like, in the US, whether it's, if you have 5 rate cuts because, your economy's gone off a cliff, or you have 3 rate cuts because you're kind of in the Goldilocks space of, lovely soft landing and the pillows cuddling me and all is well. How do you see OPEC set up now after their recent announcement with these extra cuts? Where do you see supply demand balance going into that sort of what is now pricing in the markets, a soft landing, 3 cuts, everybody's happy?
Oh boy, where to start? I think first and foremost, we had the OPEC monthly report out yesterday, and the fact that they continue to be pretty adamant that there is a deficit, not only this quarter but also a significant deficit the next quarter. It just doesn't ring really well with the kind of
supply deficit.
Supply deficit, exactly. Yeah. It doesn't really ring very well with how the market is behaving right now. We got the front end in contango, so yeah, it's really difficult to take these numbers serious. And obviously, if OPEC producers themselves believe those numbers, then they should just make an additional cut, because then if you really see the market being as tight as it is, then obviously it wouldn't take much more in terms of cuts just to really squeeze the market higher. The fact they're not doing it does indicate to me that these numbers are wrong. So we probably have a small surplus at this, or a fairly balanced market at this point in time, where traders are just simply getting out of their positions. We're heading into the very quiet period now ahead of New Year, and that basically means you're not the appetite for risk in the oil market right now is fairly subdued. So where are we heading next year? I think we will see a reduction in exports out of Saudi Arabia, simply because the domestic refinery activity starts to pick up over the coming months. and that will also help to tighten the market a bit. They obviously do know that. So I think there is I still believe there is a floor in the market here below 75 in Brent. It is an area that will be defended by the producers, but also an area below which I don't find being justified at this point. But just overall, the market is confused simply because the numbers that are being presented doesn't really ring any resonance with the way the market is behaving. So there is a gap that needs to be explained at some point.
Yeah, well, the EIA, OPEC, IEA, they all seem to be kind of on different tracks from a data research point of view. It's hard to know which one to anchor into when they're so diverging. Rad,
And sorry, just and it's very interesting. It's happening at a time where it's almost you cannot a ship can't start its engine without someone knows about it. So really there is so much tracking going on these days that it's quite incredible that we still can't get these numbers to resemble anything that looks something that makes sense.
Rad, I wanted to get your thoughts on where we're at with the geopolitics end of the sort of oil price piece or the market analysis, starting with Ukraine. Zelensky in Washington this week seemed to get quite a lukewarm response from obviously the Republican side. The signals have been there for a while, but actually in person it looked a bit sad. What's your take on where the US/West goes in their continued support for Ukraine's fight against Russia?
I think if you put it right in terms of the US slash the West, and certainly the US slash the EU, there's a real risk at this moment in time that they go on different tracks. Our sense is still that the Ukraine will eventually secure some sort of funding. But what's happening is that the Ukraine question is, I think, hitting two things. One is fatigue, and that sense that the war has hit a stalemate. And questions about sort of long-term support, but also hitting an election cycle in the US that's well and truly kicked off, and with Republicans with an eye to what their presumed candidate Donald Trump is saying, and pressure that's coming down from there in terms of policy. Republicans in Congress don't want to sort of step too far out of the lane and out of the guardrails that are being set by Trump. And quite clearly, he has very specific views in terms of funding Ukraine in the longer term. But I think, the challenge really does become that of politics over the next sort of really 12, 15 months as you go through an election and come through the other side, which will put a greater sort of onus on the EU and greater onus in terms of Europe and sort of what Europe is seeking to fund in terms of the Ukraine. And how much Ukraine can actually rely on the EU for the flow. And really that sort of is not the balance, I think, that was intended. The US was going to support the military effort. The EU was supposed to pick up the tab for reconstruction. Now we're caught in a little bit of a netherworld.
And in that regard, I mean, when you think of the where this domino, this is obviously the curtain raiser, perhaps, to a Trump return that could deliver a real challenge for Europe, EU, not just with the Ukraine issue, but a whole sort of global geopolitical tweak, shift, axis moving moment of their isolation. Do they need to get all of those ducks lined up in their own, or is this a big moment for them that this could, I mean, how big a moment ultimately are those two things stacked up? US backing away from Ukraine even under Biden, and Trump coming in the wings to isolate Europe?
I think it's fair to say that this might be the most consequential US election in 30 years. It's going to shape the next decade, and it's going to shape how a world in transition and geopolitics in transition that are really sort of coming out of a post-Cold War era and truly entering a post-Cold War era are going to look. And there are two very different views, both in terms of US leadership role and the role that the US wants to take internationally. I think, but also in terms of how willing the US is going to be to concede to the interests of others. And that's particularly going to matter in terms of US-China relations, but I think it also feeds into US relations with other partners, and with other parts of the world. So conceivably, a Trump administration would lead the world in a path of much greater geopolitical fragmentation. And I think it needs to be seen in those terms. This could be something akin to 1992 and the Clinton victory that sort of really established the foundations for a globalized order that we've gotten used to until recently.
Rafiq, if you might pick up that geopolitical thread, obviously on your doorstep there in the East Med, the terrible events continuing in Gaza, that is putting the US obviously not only in a breakdown and isolation from all of its Security Council colleagues, but also now fracturing their relationship with the Israeli government. How do you see this playing out? Are we near the end, or is this only the beginning? What are your thoughts on where this goes?
Yeah, I'll get to Gaza in a second. But first of all, I'd like to pick up on precisely what Rad was talking about as regards fracturing and how that relates to climate. So I think this COP decision, a lot of it was based around an understanding between John Kerry and Xie Jianhua, the lead China climate envoy, that they would not allow their fractious trade and geopolitical relationship interfere with climate, and they actually managed to produce quite a highly unified would be the wrong word, but they did, and I think that was critical in getting this deal over the line. Clearly, I think Kerry turned 80 during the COP,
and he was there the whole.
Yeah.
12 days.
Yeah. Oh, yeah. Quite astonishing, actually. I have to, chapeau. And Xie Jianhua is on his way out too. So we're going to get whether very soon we're going to get new climate envoys, whatever happens. But it's pretty hard to overstate the impact that a Trump or Republican win would have on climate. To go back to Gaza. I don't think we're anywhere near their end. I mean, quite clearly, the carnage is.
Well, we do seem to be getting to an end where in terms of the American government's facilitation, that might be an end for the conflict, because the Israelis have said they'll go on regardless of international support. But in terms of that part of the puzzle, the U.S. government facilitating, backing, Security Council vetoing. Are we near an end to that?
I wouldn't be able to tell, but in terms of the wider US support, no, and that's going to tell in the way that any post-conflict resolution or interim solution to Gaza plays out, and that's going to be critical to how things work. I mean, it's clear that there are very strong voices within the Israeli government that are asking for, pushing for a permanent change of facts on the ground. And this is widely supported in the Israeli public, border change, stroke, permanent security force, stroke, limited reintroduction of settlements in there. And they're all thoroughly destabilizing, fundamentally destabilizing to not just Israel-Palestine, but also the region. It's worrying. So, and I don't see the US shaping up to confront this kind of thing
in an election cycle.
Yeah. It just it will be the first time since Eisenhower in '56 if it did.
Let's go to the survey question. And despite all that chat we have about geopolitics, it seems to have having little intersection with the oil markets at the moment. The question this morning is, will the Fed pivot, lift all boats, including oil markets, through end-of-year rally? First half of December, as we said, oil prices off 10%. They've been down every week for 7 weeks. Will this be a week in which that trend is broken? But will this Fed pivot lift all boats regardless, including oil markets? through the end of year rally, and then maybe people look a little closer in the new year when they come back with their credit cards full and their wallets empty. Will it lift all boats? Yes, no, maybe. Ole, looking over the horizon of the coming month, and obviously the festive season and so forth, where do you think these markets trade? I mean, given all of these factors in play, you mentioned, I think in one of your earlier comments, you close your book and you go to bed. You don't leave exposure on the table over these weeks, not only because it's the festive season, but also because there's just so many unknowns. But what do you think the direction of travel is here, second half of December?
I think it's more of the same, simply because the appetite for going against the current trends.
So continued downward draft?
Actually, that was the exception I was just about to say come to as well, because I was just looking at the stock markets where we saw a record high in the Dow yesterday, and that makes me extremely nervous for the first few weeks into January, because quite often if we end on a high note, the first move tends to be the opposite when the new year starts, and the opposite if we had a very very weak finish to the year, because positioning I think at this point in time more question about just feeding the rally and getting the biggest as high watermark as possible when we come to the end of the year. I think the oil market, I wrote that I clicked on the bullish simply because the market is pretty oversold. The market, the speculative long has been almost annihilated. Short has been rising recently, and this injection of optimism, I think, that came through that statement yesterday will potentially be enough to attract some short covering. So with that in mind, I think it's more a short covering exercise more than a reversal that we're looking at in the coming weeks. But it potentially could set the stage for at least a higher finish come 31st December.
Rad, your thoughts, same question, but also just to pick up on the thread there that maybe my last comment is actually not correct, in the sense that the events, the geopolitical events and the events in Gaza, or the Israel's invasion of Gaza, is not having impact on the oil markets. But we are seeing re-energized activity by the Houthis off the coast of Yemen that is starting to look like maybe a bit of a serious challenge to shipping lanes there. Is that a spread? Is that a sort of this envelope unfolding? And your thoughts on that?
I think it's been remarkable that the market has pretty much discounted any sort of political risk. I mean, Ole was talking about the sort of bearish sentiment and sort of where it was looking. I mean, it's almost as if conflict in the Middle East isn't happening at all, and sort of the risks of escalation have certainly been discounted. This is a market that appears to sort of be in the mindset that if you can't show me disruptions to supplies, I don't believe it's going to happen. And I think that hasn't necessarily changed. I mean, the Houthi attacks aren't new; they're expanding, but the market has been remarkably sanguine about it, sort of as if to forget that you do have significant tanker tracking that goes sort of through the Bab el-Mandeb, and that there's a risk in the Red Sea. So, I think, again, it goes to what Ole was mentioning about sentiment. What is it that's going to sort of divert attention from all of the bad news that the market seems consumed with, and sort of starting to look at some of the risks? And I think those risks of escalation that Rafiq mentioned are sort of some of the ones that could come back and bite this market at a certain point. I mean, the closer this war gets to Iran, and any efforts to extend this war to Hezbollah in Lebanon will start to sort of bring factors into play that sort of make oil potentially more vulnerable.
Yeah, if I could
suppose ultimate, yep.
On the Houthi side, it's noteworthy that they were doing attacks even during that limited ceasefire. And I think the dangerous thing with the Houthi is that it's not necessarily driven by Gaza. They're in peace talks now with the Saudis. So how they act is also driven by the trajectory of their peace talks with the Saudis. So they're a wild card. They've got to where they have been by not standing down, by maxing out on demands. And I don't think they're gonna see that the way to continue is just to max out on everything, and that's what they've done in the past. And I don't really see them beyond some very vigorous international action. I don't really see them stepping back and de-escalating. Yeah.
It is important to remember that all of these individual theaters, Yemen, Lebanon, Iraq, they all have their own set of issues, their own set of reasons why they're doing things. They quite often get blanketly disregarded by many people in the world because they're just proxies of Iran, but they all have their own individual aspirations and reasons why they exist. But Ole, I wanted to finish off with all things China. China are in their sort of end of year number crunching for the outlook for the year ahead. We end a year where 5% was the GDP target, and it seemed a relatively somber economic engine and activity in China. What's your thoughts on where China ends and outlook for the new year?
Well, I think the market had been hoping for some more signals about stimulus next year. That didn't come through. I think probably we will see some additional support supporting the economy next year. It seems like the need for that is still there. So I don't really see the Chinese economy fall off a further cliff from here. I think there are signs that we are seeing some of the commodity markets being supported by restocking. We have very tight supplies in something like the copper market right now. The oil market, I suppose, is mostly to do with how refineries, what kind of quotas they get, what the global appetite for refined products will be next year, and that will obviously be watched very closely when it comes to Chinese imports of crude oil. But I think the next year, what will be very important, and we talked about COP and 28 and so on, is really whether the expectations or projections for Chinese crude oil demand to peak out next year, whether that is going to come through, because that will obviously send quite a bit of a signal when the world's largest importer of crude oil they hit a peak. So I think that's one we'll be watching very closely. But I think restocking not only in China but around the world now with a soft landing prospect, and also with the yields coming down, basically meaning if you are an industrial use of commodities, you have been offloading your inventory simply because it's too expensive to hold because of the high funding cost. When funding costs start to come down, that could also send a signal that they can start to that they will start to restock. Obviously, that requires a recovery in the economy, not a recession. So again, soft landing or recession, that will be a major focus in the first few months next year.
Rad, just picking up on the comments there that Rafiq mentioned, i.e. the partnership or cooperation between China and America at COP, and that it was sort of the difference in sort of advancing this COP28 agreement. But this recent, what appears like a rapprochement is obviously a big word, but since Biden met Xi in San Francisco, which was about, I don't know, a month ago now, or less even, it seems that the surprise of the year may be to end with China and America not at each other's throats, but actually more arm in arm. Is that an overreading? What's your sense of where that goes into the new year?
Yeah, that might be a slight sort of Christmas party reading,
yeah.
In terms of events. I think what you do have, however, is a detente.
Rafiq said they were dancing Kumbaya down the COP mall
there you
yesterday.
Go. That's what happens when the sherry sort of comes out. But no, I think what you've got is a detente, and it's an important point that you make. It doesn't need to be sort of a love-in. What I think the US and China have sought to do is to stop the decline in the relationship and try and sort of manage some of the risks that sort of are associated with that decline. You're not going to see a softer US policy in terms of, advanced technology exports, in terms of trying to contain China's development in key sectors, nor are you going to see any easing of the competition. And all eyes will be on Taiwan as it goes through elections and how China responds to that. But I think, there certainly is a sense that stemming that decline and the risks of that decline was something that both sides saw as a priority. And you're seeing some of the ripple effects, I think, of that going into sort of Christmas and New Year. Let's see what happens next year. And again, obviously, you have the specter of the orange god at the end of it.
The orange god at the end of the rainbow. We'll have to wrap it up there. Brent crude oil trading at 74.67. The pivot will have little impact according to this room. We'll post that on social and see if everybody agrees. But Rad Al-Qadiri, thank you so much. Ole Hansen, Rafiq Latta, really appreciate your time this morning and of course throughout the year. It's always great to have your insights and a happy festive season to you all, and look forward to having you join us hopefully on January 10th for the Global Energy Outlook Round the World 12-hour crystal ball prediction of 2024. So, you know, don't dull your brains too much over the holiday season. They can be reawakened on the 10th of January. Thanks, guys. Have a great
Take care.
holiday season. Thank you. Bye-bye.
Thank
Happy
you.
holidays.
Bye-bye.
Bye.